The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 12th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a magical and magnificent Monday. Let's make sure that we have a terrific Tuesday. And of course, the easiest way to always do that is to remember that life happens for us, not to us. That's right, folks. That little 2x4 shift will make all the difference in the world because it means that you and I can find the gift in every set of circumstance that life is going to throw out at us. And that's really the role of the universe, just like the role of the universe is to have the bulls and bears throw something at us. That's what we're going to take a look at this morning. You can give me a call if you'd like. In fact, I'd love to hear from you. 877-927-6648, mostly because I'm just simply grateful for your presence here, and I'm here to serve you. So feel free to dial in. Of course, internationally, you can call in at 727-445-1044. This is Terrific Tuesday, sometimes known as Turnaround Tuesday. We'll go check the markets out, see if that's even a possibility. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow futures off 100 points, trading at 17,940. S&P futures down about 10 points at 2,088. NASDAQ futures off 30. They're trading at 4401. Russell 2000 down about $6, trading at 12.25. King dollar back 515 ticks, trading out at 94.58. That means the euro is on the rise. That means the Great British Pound has broken out above those levels we looked at yesterday. She or he is on its way up to making an A to B equals C to the upside. We've got Goldilocks just sitting here, with the U.S. dollar index pulling back. I am convinced more and more and more each day that we ought to be taking a look at gold in relation to the euro versus priced in euros versus priced in dollars out here. That's just Stevie's thinking. In any event, it's up $9. Silver's up 8 pennies, trading at 16.40. Light sweet crude trading at 50 cents. She's trading at 59.74. Hey, a quick peek across the globe out here. Let's go see what we've got going on over in Germany. Let's start off with Germany. Down, and really Germany and the FTSE, they're both down 1 7/10% as we speak right now. Let's take a look at the DAX first. It's down 194 points, trading out at 11,479. If we take a look at the DAX, here's what we know. The DAX has begun to travel inside a descending price channel out here. That's important. You're right now kind of in the mid-stroke of that level, and that just doesn't tell you or I whether it's trying to make an A to B equals C to the upside, or an A to B equals CD to the downside. Let's just take a look at retracements here and take a look at the intra-session low thus far. Intra-session low, 0.618 retracement, really right on the spot. It looks like 11,375 is a number. We've seen 11,377 as the retracement there. So you could make the case that it could be trying to form an A to B equals CD to the upside, taking price up into the upper part of this channel line out here. That's one possibility. The other possibility is that she's just going to simply continue to move down to the bottom of that channel line, somewhere in the, the 11,160-ish type area out there. But that's what's going on inside the DAX. Not really a ton of information that it's releasing to you and I this morning. How about the FTSE? If we take a look at the FTSE, it is tinkering with, it is toying with that 69.50 level. This is a morning star, evening star pattern out here. Should the FTSE actually end the day right about this point, it could end it actually at 69.50 and still be an evening star pattern out there. That would say resistance would be nothing more than yesterday's high out here. The FTSE just dealing with that 1999. That's the breakout at 69.50.60. It's more so the weekly base that we're taking a look at than the daily charts out there. Over in Asia last night, a quick peek there. We'll see the Nikkei was flat. It was up 4 points, so no big deal there. We won't even check in on it. It's not really providing us with a ton of information. In the case of the Hang Seng over in Hong Kong, 311 points to the downside, off 1%, but there's still strong leg bull out here. Just simply working off that over-bought condition out here, doing it the most bullish way possible, which is just simply by moving sideways out there. So that's its information. Let's not get too caught up in the numbers and or the percentage. Let's understand what it's actually been doing over the longer haul out there. If we take a look at the Shanghai out here, the Shanghai was up 1.5%. Shanghai continuing that move with the additional liquidity injection, I suppose, by the Chinese as they reduce their interest rates on Sunday evening. It's no longer overbought, that's for sure. So it's got room to It's got room to go run and test the highs. I know I can get it out. 47.91, maybe even take those out and then form another A to B equals C to the upside. Okay, let's go take a look at our markets. As I mentioned, Dow futures off 96 points right now. Let's start with the daily. Let's get the bigger picture here. Let's get the bigger picture. That way we can get a feel for what's going on with the bigger picture. I popped it open. Let's take a look at the Russell 2000. Here's what we know about the Russell 2000 as we speak thus far. So far, the intra-session low has gotten us down to a price of 12.1980. Now, 12.1980, fairly close to its TAS market profile low. That's at 12.1784. This box actually formed back here on May the 5th. This box here is actually more of a bullish to versus bearish type box out here. I say that because the point of control, the level where we have the most congestion of buyers and sellers at that 1237 level, closer to the support line at 121784. Has not broken down this morning. We know that the IWM, when we take a look at it, we took a look at it yesterday. We know that on Friday, it's Friday or Thursday, one of those days, we saw a test of its swing point on lighter volume. That was a rejection of the lows out here. I was saying it just does not have enough energy to go ahead and crack to the downside. Today's a different day, but so far in the futures market on the daily contracts, we've not seen any levels of support busted. If we go take a look at what's going on inside the Dow, let's go take a look at the Dow futures, right? They were down about 150 points or so earlier. That doesn't mean they won't get down there. So far, the intra-session low is at the price level of 17,878. You're trading at 17,942 as we speak right now. A key level of support inside of the Dow, I suppose, 17,836. That's that bottom of its market profile out here. I would say if we're going to see some selling pressure inside of the Dow, the real level to be watching this morning is going to be 17, or whether it's today, whether it's tomorrow, 17,679. That happens to be the top of the swing point that takes you back to March 26th. That also happens to be a hammer candle, which can act as a good level of support. It certainly has acted as support ever since we saw the breakout inside the futures back on April the 6th. We've seen 1, 2, 3, maybe 4 tests of the top of that hammer candle, the 17,679. So you got some decent support at 17,836 and 17,679. Let's take a look at the ES-Mini, S&P futures. What did they do yesterday? They just simply failed to be able to get over their the horizontal trading range level in the 2109-ish area. Even though it says 2108, it's my system's got anyways, you don't need to know the details there. But if we do take a look at levels of support or resistance, the bottom of that TAS box, which is really strong support out here, it's not even anywhere near there, 2038, that happens to be down towards the bottom of the consolidation level. The top of that box, 2068, that has not been tackled. If we see price move lower today, 2068.75 ought to act as very good support. Now, 2068, that is 20 points lower than where the ES-Mini is trading right now. So it'll feel like the sky is falling. And I'm not saying we're going to get down there, but that's the level of support that we would want to be watching. And that's inside the S&P futures. If we go take a look at the NASDAQ futures out here, NASDAQ futures, really the same thing as the ES-Mini. It's got a consolidation level, 44.73. That's the top. We've seen price here pull back. So far, intra-session low this morning is 43.87. really good support at the 4370 level out here. That area has been tested several times. There's also a hammer candle out here inside the NASDAQ. That happens to be right here at this price point, and that is at the 4331 level. That is the top of also the March 26 candle session out there. So now that's not the most, we do have a swing point that's a tad lower. That took place on April 1st. But we can see that the bottom of that hammer candle, which has been tested several times, still is holding its support. Now, that's really important. It's really important both from the bullish and the bearish side out here. Really important because if we do see it close below that hammer candle, which, by the way, is priced at, and I'm not saying that's going to happen today, but when and if it does happen, any move below 4270, that's going to tell you that the sky will start falling down. Now, where will that fall to? I don't know. It most likely is going to fall back just simply into the January 16th lows out there, somewhere around the 4039-ish area. But you got to get a crack of that 4270. We also know that it's a 200-point consolidation. That's the box we're looking at, 4270 to 4470. That would say a crack below 4270-ish would take us down to 4,070. So it just takes you back in that January, as I say, January 16th or so swing point. So that's what's going on inside the daily time frames. Let's go take a look at the 30-minute time frame. So now let's go from daily. Let's go shift into the 30-minute time frames. See what we can find out here to give us some clues. We're going to still focus on the Nasdaq. I said yesterday the Nasdaq was the key indice for us to follow. I still believe that to be the case out here. As we take a look at this 30-minute time frame chart, we can see that price had moved down. Looks like it made probably wave 5 out here, and we can see that the bulls have been rushing in to defend these lows out here. So on the daily contract, that low out here was down at the, don't do that to me, I'm on live television. Down at the 4387 level. So that's going to be a key area for watch. We saw a nice little bullish engulfing candle that formed out here. Price certainly had moved into the oversold condition out here, but price was moving lower, as we can see at the bottom of that hammer candle that occurred during the 8 a.m. session. So from 7:30 to 8 a.m., this 30-minute chart again that we 30-minute chart that we are looking at. You have a nice little hammer low. You also have a nice little TAS profile out here that was set up from a bullish configuration. The key area now with regard to the Nasdaq, as we take a look at coming into this 9:30 open, is can it close above this 44.0? We'll call it simply 44.04 level. If it can, then what are we looking at? Well, let's go take a look. Where are we at in the wave count to the upside out here? You're only in the second wave. That would say price would move higher. Maybe it moves up to the 44.26 level. We can take a look at retracements out here. But right now, as we speak at 9:18 a.m., we can. So how does this help you and I? How does this help you if you're trading out here? If you're short the Nasdaq, if you're short the Nasdaq, what you want to see is a close below that hammer candle. So that price of the hammer candle, a little bit different than the actual lows out here, the bullish engulfing. But one of the things that you're going to be looking for is a close below that hammer candle today, and that's going to be the price point of 4388.25. If you see that, then you go back and basically, if I switch back to the daily chart, that brings at least the daily support level inside the Nasdaq at the 4370 area into play, and that's probably where price would at least head down to 42.370 to 43.31. So that is what's going on as we take a look at our futures contracts, as we take a look into Stevie's crystal ball out there. Now, we get back. We had a nice caller from Boston yesterday, Mary. She wanted to get short the bonds, and of course I said be patient and wait. Bonds have moved lower. Let's go look at the pattern inside of the bonds, see if we can assist her again. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this two-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. S&P futures off 8, NASDAQ futures down 23. Let's go take a look at the 30-year Treasury out here. 30-year Treasury, just a follow-up to yesterday's conversation during the 10 o'clock hour. And as we take a look at it, we're going to take a look at two charts. First, I'm going to go over into the continuous contract, because that's the one that shows the pattern that we're going to talk about most often out here. And then we'll go to the then we go take a look at the current contract, the June contract out here. The pattern that's in play, that really is in play as we speak right now, is the mere fact that we've seen one of Stevie's favorite patterns, that if you trade the treasuries out there, TLT, TBT, you may not trade the futures contract, but by goodness, you cannot trade those. Well, you can do anything you want. My suggestion is, please don't trade those without getting access to the to the actual underlying instrument out there. Look, you can get delayed feeds or things of that sort, but you're really flying blind without being able, and the patterns that show up in the futures contracts, we take a look at the patterns in the morning when we start the show off here. They show up more so than what you're going to take a look at. So, for example, let's say you like to trade the SPY out there. Great. Or you like to trade any element of the SPY, a 200%, a 300% out there. For goodness sakes, go get access to the ES Mini. Go get access to the futures contracts, because you have to be aware of the patterns that are setting up. It's the only way that it's going to help you understand, when the futures are down 150 points, where are we at? What is it doing with regard to the patterns that are out there? You just really need to have access to that. Inside of the 30-year Treasury bond, T-bond futures out here, what we're taking a look at is when price moves lower, and it does it with a rising stochastic. Okay, that's what I've got in the bottom of my screen out here. It tells us of an impending reversal that's going to occur. It doesn't tell us how high. We have to use other tools to try to figure that out. Likewise, when we see price moving higher and we have a declining top, so lower top forming inside that stochastic out here, that has been a great indication of a top that's been forming. If so, fast forward, you can see that with the different red and green lines on my chart out here. Now, Mary had called yesterday wanting to go short the bonds. My suggestion was just wait for this bond to bounce. And just simply, and I gave her some numbers on the TBT. Then I got an email from someone saying, okay, well, if you won't go short, or you're suggesting not to go short, where would you go long? My response was I wouldn't go long until I saw some type of confirmation of a rising bottoms stochastic out here, which we can see. We've seen price move lower. It certainly moved lower. It took out the lows out here from May the 7th. It's moved lower. It's very close to forming a hammer candle today. We've got a lot of time left in the trading session, so we can't even really get into and speculate what type of candle may or may not form out there. That's basically futile. But we do know that we can see that it's certainly off of its session lows out here, and we can see that we've got. So what else do we have now? If we go switch over and take a look at the current contract out here, what you're going to see very clearly is you're going to see a couple of different patterns. Number one, we'll see the A to B equals CD pattern, right? I see it. Let's go see where that completes at. Let me I thought I had the tool on here. I thought I had it on there. It's not on there, but we're going to add it. Give me a moment to do that and find that. There we go. Okay, should be on there. There we go. Okay, great. So if we take a look at the A to B equals CD pattern out here, your A point, oh, it's there. All I had to do was click the button. That's too funny. I like my crystal ball. I like the way my system just goes ahead and responds. I didn't even draw it in. I must have drawn it in earlier. I must have drawn it in at some other time, and it just picked it up. So that's a beautiful thing. So what we can also see here is that you've got a 1-to-1 A to B equals CD to the downside. That gave us a price projection of about 150 and a half out there. And we can see as the low so far this morning, 151. 0.04, so very close to completing that 1-to-1 A to B equals CD to the downside. It looks to me like we've got an expansion of swing points as well. If we take a look at that expansion of swing points, we're going to see that expansion, well, we can see you've got a 1.272 expansion. That came in at 151 and 18th. And so what we see here is you've got a number of different patterns that are forming inside of the June contract for the 30-year Treasury out here, and that suggests that we're going to see some type of bottom. Now, what you'd really want to see, though, at the end of the day is you want to see some type of bullish candle. So preferably, you see price close right up towards where the session high has been, right around 153. And change out there, and that would then give you confirmation that we ought to see T-bond futures bounce, and then perhaps those levels inside the T-buy, how about that, the TBT come into play out there. So that's what's going on inside of the Treasury market. Let's go take a look at the currency market out here. We're going to have to wait because we're out of time. But hey, how about that euro? As we take a look at the euro, we'll go see how this market is going to open. The euro traded a bit higher. Looks like, wants to go test the top of that descending price channel. But we'll go take a look a little bit further after the market opens. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 114 points, trade at 17,991. S&P's down 13 at 2,092. Composite off 36 points at 49.57. Russell 2000 down 6 points at 12.29. DAX off 194. FTSE down 113. Goldilocks up $6. Silver is flat, trading at 16.30. Light sweet crude up 45 cents, leading the charge to the upside. Ticker symbol PLL, PAL Corp. That's up 21%. Must be a merger acquisition kind of deal out here. Let's see. Wall Wall Street Journal Corp nearest possible sale. PAL Corp. AOL, that is up 750 out there. I think that is also a merger, is it not? Yeah, I think so. I think, Verizon, okay, they agreed to buy AOL. Edwards Life Sciences, okay, that's how about this? That's up $5, but how about Pain Therapeutics? PTIE. Looks like they have solved pains out here, and that would be nice if, let's see, Pain Therapeutics meets both primary endpoints. How about this move out here? Up 77% from buck, looks like maybe about $1.98 or so yesterday into about $3.43 out there. Syngenta, SYT, that's up $1. Magic Jack, that is up. Magic Jack, I haven't heard much from them lately, meaning commercials, but I don't really watch info commercials out there that much. But Magic Jack, call is a ticker symbol, up 16%. That's up $1. To the downside, you've got New Link Genetics off $11, almost $12. That's down 22%. Rackspace Holding, REX is a ticker symbol, down 15%. Netflix off $5. Tableau Software up $3. Amazon is down $3. Hey, let's go out to Philadelphia to our man John. John, thanks for calling. Thanks for holding. How you doing this morning?
Good morning, Steve. Thanks so much for reviewing the stock indices and the bond market. I found that real helpful.
My pleasure. My pleasure as always. You're taking a look at TLT. What can you share with us in the audience?
Yeah, no, I frankly have I can share one thing and then ask you a very specific question on TLT. TLT has declined this morning to new swing lows, as we know. By the way, before I ask you the question and describe something on TLT, can I share with you and your audience a very important feature regarding the bond futures contract?
Absolutely.
Steve, we're getting wide-ranging moves where we need to pull up the weekly chart to perform analysis.
Okay.
You know, looking back into time for prior swing highs, swing lows. I want to tell you, I implore everyone not to use the weekly charts on the bond futures for doing that sort of work. Here's why. Back in, I think it was the fall. Actually, maybe it was winter or early spring. It was sometime in the past 6 months.
Mm-hmm.
The bond futures contract went through a very significant change.
Right.
Here's why. The long bond futures contract is a derivative for delivery of U.S. Treasury securities, cash market,
right,
with maturity of either 15 or 20 years minimum. Very specific. A change in the pricing of the futures contracts occurred because, let's all recall, back in 2001, when the United States was running a budget surplus, the Treasury Department ceased
they stopped
auctioning off 30-year bonds.
Right.
And there was a period of time, 5 years at least, in which there were no 30-year bonds issued. So now we fast forward 15 years hence, and what people in the trade are faced with is that there is a window of 5 years, right now there is a 5-year window in which there is not cash paper, that was available to deliver against that futures contract as was previously configured.
Right.
And hence a redesign occurred.
Right, back in
February.
February.
This sounds fairly confusing.
No, it's exactly. It was the explanation for what occurred in February, that repricing.
If people want to understand the very technical features, one merely goes to the CME websites and can read in the bond section those details. Suffice it to say, I guess it was back in February, you're pointing out, the bond futures was a contract trading somewhere in the maybe the 130 range or something, and all of a sudden we jumped to the March contract or the June contract, and the price of it was 160.
That's
correct. A function of being redesigned because of that phenomena back in 2001. The point of the matter is, as a result, when one looks at the weekly or monthly charts, one is not looking at the same instrument.
Absolutely.
It's two different instruments paced together, and any technical work, Fibonacci retraces, trendline support marks, are totally, I repeat this, totally invalid. So please don't do that. If one wants to do technical analysis on the long bond, the alternative you have is to look at the 30-year yield itself, look at that chart.
Right.
Or look at the TLT.
Right.
So I just want to share that with you for your listeners' benefits, because
I appreciate you doing that. And every time I pull up the continuous contract, I tell folks don't pay attention to that gap out there. And the tool that I like, as I discussed during the one of the opening segments, was it still has that nice pattern where we've got divergence between price either moving higher or lower and what the stochastic is doing out there. And it works so well on the bonds that it's a beautiful tool out there. But as you say, and you got to go take a look at when you're trading those vehicles, go take a look at the current underlying instrument on it. And inside the 30-year Treasury, if you take a look at the June contract, we know it's close to an A to B equals CD to the downside that has formed out there. I imagine that's the same thing that you're looking at inside the TLT at this stage?
Indeed, and here's my question on the TLT. Now that the TLT has declined this morning at 7 a.m. into the 117.5 area before bouncing,
right.
We've gotten to the point where since the January 31st top in TLT, there is an ABCD down in which today's early morning low is almost exactly at the 1-to-1 target level.
So intraday pre-market, it got down to the 117 area?
117.60 was the print.
Okay.
My question to you, Steve, now that we've effectively reached the 1-to-1, is there any reason that you would be suspecting this decline from April 6th is done for now?
Yeah, I think the question becomes how much of a bounce do we really get out of this? I do believe that the decline is done, but is it a major type of a bottom out here? I would say, John, that only if bonds can take out that May 8th level, inside the 30-year. Then we'd see some type of deeper retracement, and therefore, so I think that the better trade, it seems to me that the better trade on this is to wait for the bounce to set up the short. But intraday traders, that's a whole different scenario. But are you thinking that? So my thinking is that I'm looking for some type of a bounce. I don't know if that's a 0.382 or 0.618 retracement out there. But I think that the better trade is that we see that it's very possible that was a major top that came in back in the January timeframe. It was February. I think it was January 30th. Yeah, January 30th, February 2nd. January 30th, I believe that it was.
Steve, what I'm wondering, you so rigorously and in a disciplined fashion apply technical tools to the daily and weekly charts, like the Chapman wave counts, like your technical confirmation or divergence setups. My question is, are any of those tools that you apply to TLT suggesting an imminent low or not? That's the question.
Well, what I can say is that commercial traders of T-bond futures, so I took a look at the COT data over the weekend, excuse me, what I noticed was that back at the most recent highs, they were up at, pretty strong net short position. And they have stepped off the gas pretty big. And, it takes a long time for them to kind of get out of their positions out here. They're not down to the level of being net long where the other significant bottoms have formed. So that is the reasoning to say, I think that what we're looking at here is more of a potential bounce for the next sell setup. But I haven't seen now. I have no idea what the commercial traders did between Wednesday, Thursday, and Friday. That's the problem with using that data. But what I do know in taking a look at T-bond futures is that they exited their net short positions in a very rapid way out there. Not down all the way to the bottom. Maybe that's what this Friday's data shows. I don't know. But at this stage here, I'd say they're more neutral than they are net long. Does that make sense?
It does, yeah.
So I don't see I haven't seen a confirming message there other than to say that what we're actually seeing in the charts makes sense for some type of bottom. And then it's a matter of, then it's a matter of trying to find a point of attack. Today, I'd like to see some type of bullish reversal candle because, only 60% of the time does price move to a one-to-one pattern out there. And so the other 40% of the time, it's going to continue its move. In this case here, continue its move lower out there. So even though these patterns that we're taking a look at, I kind of look at some of these divergences as nothing more than a weather pattern, forecast that maybe we're going to get storms or something. To me, when we get a confirmation that those storms are not going to occur, we see some type of reversal candle. In this case here, it would require some type of bullish reversal.
Right.
For your style trading, because you are so disciplined with regard to, taking a trade at the end of a 1-to-1 A to B equals CD and using a relatively logical stop out there, that becomes an easy place for you to keep, keeping your losses small, keep poking, and be ready for the trade. But a lot of folks out there are not as disciplined as you, unfortunately, and don't use stops. That's a shame.
Steve, thanks very much for the input. One last thing I'll just observe and share with you. I'm looking at the June T-bond futures contract.
Yeah.
And if my count is correct, it appears on that daily chart the Chapman wave count is now in leg F, down.
Perfect. Okay.
Getting very close to that leg G setup that we often look for to use to trade. So just a heads up there.
No, that's great. Thank you. So that means, folks, ideally what you'd see is a nice reversal candle today, a little hammer, and then maybe a little bit of bounce, and then one more test lower on today's Tuesday, on Thursday, to set up that seventh wave candle. But sometimes the seventh wave doesn't form, as we both know.
Indeed. Steve, thanks so much for your help. Do appreciate it.
You bet. Thanks for calling. That was John in Philly, and thanks for sharing all that information with our listeners out there. Right now, we've got the Dow's off 162, S&P is down 17. When we started the show, we were taking a look at the intraday charts here inside the NQ. Now, the 30-minute chart here is not going to complete for another 12 minutes, but let's go see what it's doing. I believe we had some hammer candles that had formed out here, and we see a close below that hammer candle as we speak right now as well. So we're seeing a close below those lows, right? When you close below a hammer candle, what is the expression? If you're long, you're wrong. Now, again, price can do something, can bounce. This can hold as support coming in the next 12 minutes. But let's go with what we have right now. What we have right now is we have price being below that area. That says, as we go take a look at the 120-minute time frame chart out here, this is the chart that we looked at yesterday. This was a chart where we were saying, okay, price had on Friday, we saw that nice bounce inside the market after the jobs numbers. What the NQ did was it bounced right up to the top of its descending price channel. Bounced up there, nice little bearish engulfing. It was also near the top of the TAS market profile trading box out here. We saw a price break of that yesterday afternoon. It was like around 2 o'clock, I believe. No, it was around 4 o'clock when we actually saw the break below that level. Now, what we are seeing is a continued push lower, and that continued push lower can come and take us back into the lows out here from last Thursday. And was it Thursday? It was May the 7th out there. I believe that was Thursday. So we get back from this break. We'll go take a look at that. We'll go take a look at a few other things as well. This is Steve Rhodes with TFNN. Dow's off 154, S&P down 16. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 129, S&P is off 14. Well, as it happens to turn out there during the time that we were at commercial break, we saw the bulls come in and defend the territory of these lows here this morning. The bullish engulfing candle at 6 a.m., the hammer candle so far at 8 a.m. out here. So that is we'll see how this actually completes in 6 minutes. So let's not spend any time there. We'll come back and take a look at it at the opening of hour number 2 of the Trader's Edge. Close below that level. A little bit more ominous type message out here. Let's go look at some of the other messages. Let's go take a look at the VIX index. The VIX index right now, what we've got here is we are trading above the 50-day exponential moving average line. That is at 1422. You're trading at 1473 as we speak right now. So that's a good size move percentage-wise. What we're taking a look at percentage-wise out here in the move, it is the VIX is up what? Where is that? Only about 6%, 87 cents. Key level to be watching here today is as long as the VIX stays above 1422, that's where you can begin to see price erosion out here. That is what's going on there. If I take a look at the summation index across the board, we're back below zero. That means the Dow finally got back below zero here so far this morning. Of course, this indicator does you and I no good until the end of the trading session out here. We'll see what takes place. I'm specifically looking for something in the NASDAQ composite to confirm that we're still in this choppy market out here. Now, it's not so choppy inside the composite. The composite seems to have put in a relatively significant top out here on April 27th. I don't know if price will actually get back up there. It should, but I don't know if price will actually get back up there. What it should do and what it will do can be two different things. In the case of the Dow, though, not really much in the way of price erosion out here, so there's no reason for it really to not actually go try to tag that March 2nd high. I know that's not what the sellers and the bears want to hear, but the reality is we are still in this choppy market out here, and things should remain as such for a while. And, of course, that might be courtesy of your favorite currency pair in mind. We'll have to take a look at that during hour 2 of the Trader's Edge, but that is the Euro-Japanese yen. She's trying to break out. We'll go take a look at those patterns and more. Stay tuned, folks. Hour 2 of the Trader's Edge will be up in about 10 minutes.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.